After working with affluent international families for over 20 years, I've noticed a weird pattern. The more successful families become and the more wealth they grow, the harder it becomes to take action with their investments and their financial life in general. And the reason for this isn't strategy or timing the market, it's actually about psychology, because doing well with money isn't necessarily about what you know, it's all about how you behave, and great financial behaviour is really hard to learn and very hard to action, even for smart and successful people. In fact, the challenges of properly sorting out your financial life and making smart decisions actually gets bigger the more success in life and the more money you have. So in this video today, I'm going to break down the 7 psychological barriers that block affluent families from success and how to make sure you don't end up stuck in the same cycle. In the 2013 book, Strangers in Paradise, Dr. Jim Grubman explains an astonishing fact. Nearly all those with wealth, over 80% of millionaires, are self-made, from working class and middle class backgrounds. He explains how the journey from modest economic circumstances to high affluence can be a bumpy ride, and in fact draws a parallel with the experience of an immigrant to a new land, the wonderful yet unfamiliar land of wealth. A struggle can potentially occur between what's familiar and how to survive and thrive in this new environment. Some affluent families avoid making these changes and flounder, others assimilate slowly over time, and the healthiest families find a way to quickly integrate and adapt to this new culture. The reality is that it's incredibly difficult to find a trusted guide that understands the new norms within the new land of wealth that many successful expats who literally are immigrants find themselves in, and who can explain how best to make wise decisions and appropriately adapt to the new norms. So the first barrier is how exactly to adapt behaviours in this new land of wealth. So let's look at some of the specific challenges that expats or immigrants to the land of wealth might encounter. Most people think that if they can just make enough money, their problems will go away and there'll be harmony in their household and their relationships will be better. But this isn't how wealth and success actually work. What actually happens is lack of time. Many affluent families become affluent by trading their time or human capital for money. For example, let's take global elite partners at law firms. They can create substantial wealth, but can be time and health poor. Missing anniversaries, missing birthdays, and key life events are a trade-off. And at some point, those in the grind of life, often between the ages of 30 and 55, need to work out an exit strategy to get off what can become a hedonic treadmill. Lack of trust. Affluent families are cannon fodder for financial services industry hell-bent on vending them expensive products and complexity. Private banks, trust companies, real estate brokers, private equity, venture capital opportunities, and other esoteric opportunities designed to appeal to this new status whilst eking away their wealth, not optimizing it. Minor life problems become magnified until they're major problems. Small things that you wouldn't ordinarily be worried about when you're stressed about money now become the big things that once those money stresses go away. You might become livid about the building delays on your new house, resentful of other people's apparent success, or frustrated that the apparent freedom that you thought wealth may provide feels more like shackles. Having lots of money doesn't change you. Contrary to popular opinion, it just reveals more of what you've always been and what you will always be. If you're an anxious person by nature, wait until you see what market volatility and swings can do to you. If you're not particularly nice, then money can potentially make you unbearable. And if you're generous, then money is going to help you change other people's lives. You're forced to make new friends and acquaintances because it becomes harder and harder to relate to the people who've been in your life a very long period of time. They just might not be able to do the things that you want to do now, and your perspectives on life, politics, raising children, life success, and prosperity may all begin to shift. Other people, even your innermost circle, may begin to despise you, even if they don't show it, even if you do nothing to provoke it, even if you help them. In fact, especially if you help them by lending or giving them money. This is potentially out of envy. Not all of your friends will be as happy for your success as you hope. You begin to take pleasure in the strangest, most random things: walking, sitting, housework, running errands, etc. Having a lot of wealth means having a lot of things that require your mental attention and relentless planning. Holidays become complex work projects. Cars and boats become investments. Chores, on the other hand, become mindless pleasures, a respite from your train of thought. Above all else, financial security enables you to look for success in life's other domains. Some of this may boil down to how much money you can put into your investment account, but a lot of it will take the form of feeling emotionally satisfied with your life. A thriving, flourishing, and truly prosperous life means different things to different people, and without a clear idea of what an ideal future means to you, the nagging, ongoing struggle for contentment will never stop. So, the second barrier is that once you've started to succeed financially, you've only just begun to succeed personally. If I asked you to walk across a tightrope between two skyscrapers, you'd probably laugh and say no. Or at least I hope you would, because all you can see is the risk, and one wrong move, you're done. But what if that same tightrope was just a few inches off the ground? You might well give it a try, not because the challenge itself has changed, but because the risk of failure has disappeared. Psychologists call this expectancy theory. It's the idea that if you expect a good outcome, you're motivated to move forward. But if you expect failure, you can just freeze. And that's exactly what happens with investing in good financial life management. If you've never done it properly before, it can feel very uncertain. You don't have proof, experience, and knowledge that you're making the right decision, so your brain can hesitate. You tell yourself you'll start once you know enough, once the market looks safer, once you feel ready. The longer you wait, the more you reinforce the belief that taking action is risky, complicated, not for you. But confidence doesn't come before action, it comes from action. And the only way to trust yourself and start the magical compounding effect of wise investment and to actually get a great financial life is to actually get started. You need to take a first step onto the escalator of wealth in order to start moving up it. So the third barrier that blocks high-earning professionals from success is uncertainty. And there's another psychological concept called construal level theory, which explains a lot about why so many families new to wealth struggle to ever get started. Simply put, we have two ways of thinking about things. The first is an abstract mode or far away mode, where we see the big picture, the dream, the end result, and the long-term benefits. And the second is a concrete mode or near mode, where we deal with the immediate reality, the effort, the complications, the uncomfortable bits. Take fitness, for example. When you think about getting in shape, you imagine yourself looking great, feeling healthier, and having more energy. And now that's the abstract mode. But as James Clear says in his book Atomic Habits, the biggest weight to the gym is actually the front door. Get past the front door and it becomes about how hard you're breathing, how heavy the weight feels, how much your legs are on fire. Now that's the concrete mode, and that's when many people just give up. And when we apply this to family wealth, you think about investing and you imagine building long-term wealth, securing your family's future, creating a legacy. All great things. But when you actually sit down to invest and structure and plan your financial life, suddenly you're faced with complexity and contradictory information. Endless investment options that all sound risky, and a mountain of paperwork and bureaucracy to actually get anything done. The dream of a financially secure future, doing what you love with who you want, feels very different from the reality of actually sorting out your financial life, optimizing your future financial life trajectory, and investing wisely. I like to call this difference the imagination gap, the huge difference between how we picture something and what it actually feels like to do it. For wealthy families, this gap can be even wider because whilst the idea of a great financial life free from anxiety is exciting, the reality often means less freedom and dealing with some unfamiliar financial disciplines that we've never previously taught about. So, what happens? You can keep the dream alive by thinking about taking action, but avoid the uncomfortable reality of actually doing it. You tell yourself you're making progress because you're planning and thinking things, but really, you're just stuck in the comfort of your imagination. So the fourth barrier to success is inertia or procrastination, which leads us nicely onto the fifth barrier, which goes even deeper into human psychology. Have you ever wondered why it's easy to do what everybody else is doing, but much harder to step outside the norm? Well, this goes way back, because for most of human history, standing out wasn't just risky, it could be deadly. Taking the wrong kind of action, going against the group, or failing at something too publicly could get you exiled or even worse. So, over time, our brains have learned to play it safe. We're wired to follow socially acceptable paths. That's why no one questions showing up at work on time or saving money in a bank account. These things are expected. They feel safe. But When it comes to things like starting a business, taking a new career path, or investing in something outside of our comfort zones, there's no built-in approval process. There's no social pressure pushing you forward. And this is what I call the safety instinct. It's the unconscious resistance that makes it easier to do what's expected and harder to do what's different. For affluent international families coming into wealth, this is especially true with investing because whilst working hard and growing wealth feels like a responsible thing to do, investing itself can feel like an unnecessary risk. No one will question you for keeping your money in cash. No one will pressure you to take that next step. So without even realizing it, your finances drift, not because it feels logical, but because it feels safe. But here's the thing. Playing it safe with your money might feel comfortable now, but in the long run, it could cost you far more than you potentially realize. So the fifth barrier holding you back from success is fear. Our brains simply weren't built for long-term thinking. For most of human history, survival was about immediate rewards. Finding food for today, staying safe, conserving energy until it's absolutely necessary. But fast forward to today and the world looks completely different. We're no longer fighting for survival on a daily basis. Instead, success is about long-term decisions, building wealth, securing a better future, and making choices that pay off much further down the line. Our brains haven't actually caught up. We're wired for instant gratification. That's why it's much easier to buy something expensive today than to invest for the future tomorrow. It's easier to keep money in cash than to put it into assets that will be growing much quicker over decades. It's easier to tell yourself that you'll start investing soon than actually start doing it now. This is what I call present bias trap. Our tendency to prioritize now over later, even when we know much better. And for the successful globally minded families, it plays out in an even bigger way. You're earning well, life's comfortable, and there's no urgent reason to change anything. So you tell yourself you'll eventually get round to it, but eventually keeps getting pushed back until one day you realize that you've missed out on years and years of growth. So reason 6 is that you don't find it easy to think in decades and you spend your time thinking about today. This brings us to perhaps the most fundamental barrier of all. Wealthy people just don't know where to seek wise counsel and sage guidance. As I said before, the worldwide financial services industry sells hedge funds, venture capital, private equity, structured products, and other complete nonsense. Few parties are genuinely interested in imparting wisdom that leads to life success for the new immigrants into this land of wealth. But the good news is that despite being a little like hen's teeth, investment stewards and fiduciaries or trusted guides for wealthy families do exist, and I've actually put a link to the Global Association of Independent Advisors in the notes. Each of these firms is annually audited by the Centre for Fiduciary Excellence, or CFEX, to ensure that they provide the world's highest standard of independent counsel to those with wealth. So reason number 7 is that most affluent families are just simply unaware of what an investment fiduciary is and what it can potentially mean to them and their ideal futures. So now you know why smart, highly affluent international families struggle to take action and invest wisely in their futures. But how do you get out of these traps? Well, first you need to reframe how you see risk. Ask yourself, what is your desired future state and what is the consequence of doing nothing? What is the numerical cost of that inaction and drift? Will you regret missing life opportunities because you were too disorganized? Because doing nothing is potentially the biggest risk of all. Second, build an investment engine. If the people around you aren't investing wisely, it's easy to convince yourself that it's fine to just stay on the sidelines. But when you start spending time in the right circles, following other similar families, speaking to sage decision makers who are already doing it, investing systematically starts to feel normal. And finally, stop waiting for the perfect moment, because the truth is there will always be uncertainty. Wealth isn't built by perfect timing, it's built by time in the market. The sooner you start, the better. And if you're still overthinking, you don't have to figure it all out alone. Yes, investing as an international family is complicated. Foreign tax laws, multiple currencies, different investment options, there's a lot. But that's exactly why professional guidance exists. So you can start investing sooner with less stress and more clarity, confidence, and control. Because the difference between those who grow their wealth and those who don't isn't intelligence or luck. It's simply those who take action. So if you know you want to take action with your investing, I recommend you download our guide to investing in the description, which explains more about actual strategies to implement. And I also recommend that you check out this video next, where I go deeper into the investment strategy I use and how my personal portfolio or family fortress looks.